The trade data just breaking at the moment. It's exports coming in a contraction better than anticipated, and indeed an improvement, of course, from the previous month there in July. August trade exports year on year down 8.8%. Imports year-on-year, 7.3%. We were looking at a contraction of about 9%, a minus 9% print for both of those, so better than anticipated. That leaves a trade balance, which was expected to be $73.9 billion US dollars at $68.3 billion US dollars there as well. So that's what we have at the moment coming through. We've been waiting for these, and it's essentially better than anticipated and better than before as well. So does it mean anything in terms of concrete improvement for the Chinese economy? Let's bring in our Asia politics and government correspondent Choong Wilkins with us. Rebecca, okay, first glance here, you haven't got a chance to delve deep and look at the devil in the detail, but what's your take?
Very interesting to see this improvement. Quite a significant beat when it comes to exports, for example. That consensus figure was expected to be down 9%.
Yeah.
Worth bearing in mind, the base level here for comparison was actually quite low as well. So that's partly why we're expecting to see some moderation from July. But this is certainly better than expected. Does suggest that perhaps some of those stimulus measures, if not already showing through, probably may not need to be significantly expanded. I mean, it's certainly a positive signal for the Chinese government, who, of course, we've seen have been very reticent to roll out significant stimulus.
Yeah, I mean, the thing is, what does it mean for growth if you've got exports and imports? It's such a significant part of the economy, and the services are now bigger, of course, but, you know, what does it tell us about that? And then you lay it next to the other data that we have as well, the PMIs of late, and then we get inflation, of course, on Saturday.
Yeah, I think longer term, you're absolutely right. There is still, of course, this sort of sluggish momentum when it comes to trying getting growth sort of boosted and back on its sea legs in China. That sign, of course, of weakening domestic demand, when we see that sort of sluggish fall in imports, is still a hangover of the property crisis. It's still this signal that confidence has not been restored. And of course, exports, when we think about this global sluggish demand, again, we look at Korea, which is sort of the benchmark for some of that for Asian names as well, very much in line with the weakness that we saw from Korea earlier for last month.